Welcome to the Crypto Freedom Summit. Now I have here as my guest Scott Melker, aka the Wolf of All Streets. He's an educator in the crypto space, and he is best known for his ability to successfully trade an asset in any market conditions. And when he isn't trading, he's hosting the popular The Wolf of All Streets podcast, authoring the Wolf Den newsletter, and a prolific writer and a thought leader in the crypto space. And he has also been featured in the New York Times, Wall Street Journal, Forbes, and Business Week. And he was named Influencer of the Year by Binance and one of the top 100 notable people in blockchain by Cointelegraph. Welcome, Scott.
Thank you so much for having me.
Yeah, it's awesome that you could join us, and would be very interesting to know that when did you started to come into crypto and start to trade in the crypto markets?
I've been trading for a long time, but I really didn't get into crypto until late 2016, early 2017, kind of when everybody, I think, caught the bug and rushed into the space. And like everyone else, I came, because the trading was incredible. It was like, we were this mythical world of these huge 100x pumps everywhere and going crazy. And then through the bear market, I started to actually care about what crypto was and start to be a bit more passionate about the use case. But yeah, for me, it was like late 2016, early 2017.
Yeah. So you were already a successful trader when you entered the crypto markets.
Successful is a tough term. I had varying periods of success and failure, like any other trader, I would say. I've never gone back and done an analysis of whether I would have just done better, like buying an index fund and waiting 30 years. But I had a lot of fun. And yes, so the trading's been generally good, but I did have a lot of experience either way. I just think the trading's a very, very hard thing to do professionally, and that you're generally going to lose money. And obviously investing and just slowly buying dips and things like that is probably better for 99% of people, and probably would have been better for me, until the last 5 years or so.
Yeah. So on this long journey of trading the traditional markets and now the crypto markets, like what kind of challenges have you faced during the journey, like before finding success?
I mean, I think the challenges are endless, and I think they're pretty universal for anyone who really tries to trade or understand markets. And mostly it's about emotions, and being able to actually have a plan and execute it. I think most people who are trading, and myself included for a very long time, are leaning more towards gambling than trading responsibly. And so moving your stop loss or getting greedy and not taking profit when you plan to, or, being overexposed on a trade to a single asset, having incorrect position size, all of those things are the reasons that people lose money. And so, eventually, hopefully, most people maybe don't get there, but eventually you just get sick of losing money all the time and finally tighten up and eliminate the emotion. So I think for me, the real, turning point was when I just didn't care if I lost anymore, like a small loss, I should say. So I hated losing, like blowing up an account or something, but then realizing that, hey, I can lose 7 or 8 times in a row and have 2 successful trades after that and do perfectly fine. If my risk is managed and I handle everything appropriately. So I think that's really the turning point, is when you learn to control your emotions and are able to sort of approach trading like a robot.
Yeah, that's interesting. You just mentioned something interesting there, that there is something to understand about not winning every trade. Like there is amount that it's enough for you to have like successful trades, but you don't have to win them all.
Yeah, it's a huge and very important point to when you realize that you can't win them all. I mean, it's kind of like Michael Jordan, his famous quotes where he talks about all the shots he's missed and all the game-winning shots he's missed and all the things. you just can't be perfect. And so an expectation of perfection and the inability to accept a loss, those are the really big problems. You can literally, if you have a good strategy, I think you can lose 60 to 70% of your trades and still do exceptionally well, like be very profitable, make a living. So people just don't realize that, because it's about managing your downside risk and letting your runners run. It seems so easy, but it's actually so complicated when you're actually doing it. But, if you're going to lose, 0.5% of your portfolio 10 times, it's not really that big a deal. Right. And so, but if you make 5% on a winner and you're able to actually hit your target, I think that you can do exceptionally well.
Yeah. Do you see that is there like some essential differences between the traditional market and the crypto markets? Like, do the crypto markets induce some particular kind of behavior or something like that?
I think so, because they're 24/7. That's really the biggest problem, is you never get a break from the crypto market unless you force yourself to. So like even in the stocks, of course there's futures and there's aftermarket trading and all of that, but generally you show up in the morning, you trade, and you're done, after 4:30, and you call it a day and you go home and you get your weekends off and you're not worried about what's happening over the weekend. So I think that there's a real level of emotional and physical even fatigue with trying to trade crypto markets at all times. So to that end, you really need to like set trading hours and set rules and make sure you work out and go have a drink with your friends and your family, and really try to force yourself to do things. I think that this is a very, very difficult market to trade. Because of that, because of the interplay between Bitcoin and alts, it gives you like another layer of understanding you have to have for what you should be trading and when. It's not as obvious as stock to dollar. If you're trading stocks, you're making dollars, but try figure out how much Bitcoin you're making or losing on a trade. And then how Bitcoin's doing in relation to the dollar. It can become very complicated. I find this to be a really fun market to trade and easy because charts work a bit better, but emotionally and as far as, fatigue and doing it long term, I think it's exceptionally difficult.
Yeah, and you just mentioned also something interesting that like which shows that how I guess many aspects trading has, like you said, now you need to set up rules and you have to manage yourself, and like it's like it has some similarities of being entrepreneur, I guess, but I notice at the same time there is like this addictive element which makes it a bit more difficult, I find, at least, yeah.
It can be extremely addictive. And if anyone who has sort of that gambling personality or has an addictive personality, they're going to probably struggle with that, I would say. It feels like trading is gambling, but if you do it right, it's really not. And that's the thing that people, I think, don't get.
Yeah. Do you have some tips on how to manage those emotions then? Because I noticed that, like there is such an urge to chase the coins that are going up fast, and these kind of things. So do you have any tips on that, like how you can manage it?
If you're a beginner, as ridiculous as this sounds, I would say do the opposite of what your gut tells you. When something's going down and you feel like panic selling, that's probably the bottom. And when something's going up and you feel like FOMOing in, that's probably the top. You should be selling when everybody else is FOMOing in and buying. And at the bottom, you should be buying when everybody else is selling, because it's probably based on your own emotions at a low enough point that that's where people are going to capitulate, just like you were about to. I don't know if you trade, but how many times have traders experienced their stop loss hitting, or they finally decide to sell and price rockets right back up the other way right after it happens? That's because you are the liquidity and you are the sucker, right? As they say, if you look around a poker table and you can't find the sucker, you're the sucker, right? So, or the fish, I think they often say. But the truth is, you need to, at the beginning, you just need to do basically the opposite of what your own emotions are telling you. And then once you get a bit of control of them, I think you just have to sort of have processes in place. Like, for example, I remember when I was early, one of the things that made a huge difference for me is that I made a rule that I would never market buy. I had to have a limit order in place. I would never just push a buy button. So even if it was going way up, that meant I had to set a buy somewhere below price to get in without market buying, right? So at least that and then if it continued up, I missed it. If it dropped, I lost a little less. I'm not saying it's going to save you money, but at least it'll get you in the practice of not just clicking buy and FOMOing into everything that goes up. Another huge rule I have for myself that's really important, that I'm much more loose with now that I do a lot of analysis for other people and stuff. But I used to, anytime I closed a trade, whether it hit the stop loss or it took profit, I had a rule that I close the chart for that asset for 24 hours and don't open it again, no matter what. Like I said, now if I take a Bitcoin trade and everybody on Twitter is asking me what Bitcoin's going to do, I'm looking at the Bitcoin chart. But the idea being that you'll never revenge trade, because so many people, myself included in the past, you buy something, it goes up, you sell, you immediately regret selling because you think it's going to keep going up. So you buy more and it dumps and you lose all your profits, right? Or the opposite. I'm going to move my stop loss down, You keep moving it down and just losing more. So, those things are somewhat prevented. You lose, I need to make my money right back on this same trade, and you go right back in slightly lower or something, and it keeps going down. It's revenge trading, and all of those are emotional decisions that you can't make.
Yeah, a lot of good tips there. And also in this event, I was interviewing the crypto sniper, Francis Hunt, and he also said that it's never like the time. It's very rare that the time is now to buy some. When you look at the chart, like you said about the market trade, it's very rarely the case that you need to buy now at this moment when you look, so there's always time to analyze this chart. And I
100% agree with that. And to the same end, everyone's always seemingly at the beginning trying to buy the dead bottom or sell the dead top. And the more advanced you become, you realize that all the money is made in the middle of the movements. You get a trend going and then you ride the trend. So like buying a dip, there's a clear uptrend. So just wait till there's a dip and buy it and continue the uptrend. And, the trend is your friend until the end at the bend, or whatever the statement is, instead of trying to time the end of the downtrend perfectly for your buy. Right. So it's kind of a similar idea. You never need to buy now if you're on trend, right? You just look for a good entry, move slowly, wait, take the time. And, if you flip that, you rarely need to sell right at this second either, so it's probably just a little dip and the trend will continue. You just need to be calm and have a plan. You should never enter a trade unless you know exactly where you're going to sell, down and up. Because the only thing that you can control in any trade is how much you lose. So the first thing you should have is a stop loss and a position size based on that stop loss. You have no idea. If it never goes up, you can't control if it wins. All you can control is how much downside there is. So it's really just about trading with a plan, being with the trend, and just understanding, that things can develop very slowly. And if you lose, who cares? Move on with your life.
Yeah, sounds very good. How would you describe yourself as a trader? We have these scalp traders and we have day traders, and
swing to at this point, I very rarely trade. I view myself as an investor. This market is too easy. I just don't. I don't trade anymore. Every once in a while I'll take a trade, but I haven't taken a leverage trade on Bitcoin or Ethereum or anything in months. Because why? I accumulated for 3 years to do this. I'm not going to go be an idiot and trade it away with leverage, right? I mean, we've gone up 15 times since last March. I bought Bitcoin at $4,000 a year ago. I don't need to do much better than that. So honestly, I'll buy altcoins that I'm interested in at launch or things like that, take really small positions because usually you can't even set a stop loss, and move it aside and check it down the road. But, generally I'm taking very long-term positions. I have no interest in staring at 5-minute charts and trying to figure out my entry. Listen, there are people who are amazing at that, but to me, that sounds like a job. And I am not trying to become a trader so that I have to work more. Right. I'm trading so that I have a lot of free time to do a podcast and write a newsletter and get on YouTube and talk smack with people and just have fun. I'm in it definitely for the lifestyle that it affords me outside of trading. So at this point, honestly, if I trade a total of 1 hour a week, it would be a crazy week of trading for me at this point.
Yeah.
Honestly, what do you have to do? You look at a chart, you see where you want to enter, you set an alarm, and then you leave. And if the alarm goes off, you buy it. Then you set your orders and walk away. It's not staring at it's not going to change it if you have a plan. So
yeah, that sounds amazing, because you know, in the crypto freedom summit, we are also all about lifestyle and freedom, that what this enables us to do, you know, this trading or investing in cryptos as well. So that sounds great. So then would you say that you actually work more in the bear market, and now you are just so you were doing more hours in the bear market than now?
By far, yeah, not even close. So the bear market, you're obsessing the whole time. It's a lot more painful, you know, it's a lot more fun when you're winning to get out of your own way. And sometimes on the way down, obviously you're trying to force yourself to lose less or avoid hitting those losses and stuff. But honestly, like, you know, like I said, there are people who can trade every day, all day. It's just not me. I've been there years ago, but at this point, I just want to sort of, you know, take really long-term positions, eliminate that stress from my life, and focus on all the other things. That said, like, all those other things I mentioned, even though it's work. I mean, I get paid to podcast, and I have sponsors and stuff, but like, I'm doing it because it's fun, but it's full time. Like, I'm working harder now doing all of these things than I ever was trading, even in the worst market, you know? So it's just, I think it's a matter of perspective. I work crazy hours, long days, but to me, it's like, especially in the context of how COVID's been the last year and stuff, like, what else am I going to be doing? Sitting around, like, reading a book? I don't know. That's fine, but it's not, we couldn't fly anywhere or do anything fun. So this is what I do for fun, you know?
So it's actually like you are still working hard, but you are not actually, that's not trading at this point. You did that earlier already. Sure. Yeah. Now you are just reaping the rewards, sort of. So yeah, that sounds perfect. You were talking about being a professional is very difficult. Like, what would you say to people who are maybe aspiring to become a professional traders? Like, you have any tips for that?
Don't. I would say don't even think about it, because it's just not a good life. As much as people think it is, if it's your only source of income, I'm a very huge fan of diversifying your income streams and stuff. To only rely on trading has got to be the most stressful thing you could ever choose, because you have no reliable income on any given day. You can have an amazing run for a month. Peter Brandt, I don't know if you're familiar with the famous trader. I'd had a conversation with him, and he made a joke that all old traders used to, like, the big joke on the trading floor was that your wife would ask you for a budget and you would tell her that she couldn't have one, because she would want to know, like, how much can I spend on food next month? You say, I have no idea. We might be starving next month, you know? So I think that, like, if you have other things going on, actually, there's a lot of reasons. So one, I think that people trade better when it's not their profession. I think it serves people better as a hobby, because they don't have to, feel like they have to be trading all the time. When I went pro trading, which is still sort of like a meme, I always had other things going on, but I was terrible the first few weeks because I felt like I always had to have a trade on, or else what was I doing? Like, if I'm not trading and I'm a trader, that means I'm like a lazy person who doesn't have a job, right? So I'm going to trade. Like, I'm going to trade. That's not like the right approach for a trader. You need to understand when you might have to sit on your hands for weeks and wait for the market to give you a good opportunity to trade. So you need to be studying or reading, or, figuring out what's going on with, oil in the Middle East, or with, gold and commodities in Australia, or whatever, if you really want to be trading these markets. So there's a lot of research to be done. It's very hard not to trade full time when you are trading full time. Also, I think you have to have a year minimum, maybe 2 years of money set aside already if you want to become a trader, because you're going to lose at first unless you get very lucky. And you have to know that your bills are paid to eliminate some of that stress. So I think that's huge. And it's so counterintuitive, because people want to take every penny they have and put it in the market to make more as a trader, but you have to have all this money set aside, which lends to the next one. Once you have all your money set aside, you have to have a big enough portfolio that you can actually make the income that you need. Because if you're going to be a professional trader, which a lot of people call themselves but never take profit apparently, or take money out of the market, especially in crypto, I don't consider you a professional trader unless you're paying your bills on trading. So even if your portfolio is $100,000 and you push it up to 110 or whatever, if your bills are 15, you're down to 95 at the end of the month, right? So it's different for every single person. I just think that if you really back up and do the calculations on, if I'm going to live my entire life only on the income from these trades, what would it take to make that happen? Oh, and then what happens if I don't do it? Because you can't have that pressure on yourself when you're trading. I think that there's no chance for most people. Now, if you want to go work at a hedge fund and you get a nice salary and then your bonus is based on performance, that's a different story. But to be a retail trader, trading your own portfolio is very stressful.
Yeah, actually, that makes a lot of sense. And I've noticed also myself that, like you said, yeah, for me, it feels like it's good to be busy with some other things. So yeah, you don't over trade.
Yeah. Because you stare at a chart, you start to see things that aren't there. Oh my gosh, it's dumping. No, it's just like gone down for 5 minutes. It's not a big deal, and if you weren't watching and you just had your stuff in play, it's amazing. Joe used to joke that my best trades happened when I was sleeping, because that's what happened when Bitcoin went from 6,000 to 3,800 last March 12th, and then back to 6,000. I had almost jokingly put bids at $4,000 because it had gone from 10 to 9 and down to 6 very fast, if you remember. And I was like, it's not going to $4,000, but if it does, I want to catch it. And I went to bed and I woke up and I went to bed, it was $6,000. I woke up, it was $6,000. So I was like, okay, it finally stopped dumping. It didn't move. Got up, got my coffee, got to my computer, and I looked and my orders had filled. So somewhere while I was sleeping, it went from 6 to 38 and back to 6. And I was up 50% on my trade already, most of which I've held to this day. Actually, I sold some right there. I'm not going to lie, because I was like, I'm up 50% and everything. But it goes to show you that when you have a plan and you just put those low bids that you don't think will fill and all those crazy things, and you have the patience to not say, I'm just going to buy it now, you tend to do much better, because it happens while you're not paying attention. When you're paying attention, you're going to just probably get in your own way and make a mistake.
Yeah, absolutely. It's, I guess patience is a huge thing, I would say.
Everything. Yep.
Yeah, like you said, this, and it's not so easy always, like you said, to put the buy orders lower and lower just to wait for the trade to come there. Like you want to be active. Yeah, you want to be doing something.
You want to be active, and you also need to be willing to just miss it.
Yeah.
Like if I don't make that trade, there's like 7,000 coins or something now. I'll find something, and that's why I say people get married to like trading one asset or something. And then that's when you're like, I lost money trading Link. I need to get that money back on Link. No, you don't. You can go get it back on Bitcoin or get it back. It doesn't matter, but they just want it back from that coin. Like it owes them something, and it's just not the way to approach it. There's a million things to trade as a trader. As an investor, you can be very passionate about Bitcoin or about any certain coin that you're, a community member and you love it or whatever. Totally great as an investor. As a trader, that's doom.
Yeah, that's good advice. Do you have some tips on how to, like when you trade, like how you find what to trade? Do you have some tips on that, like how to find some, like they call setups or the coins?
I mean, I because I write a newsletter every single day and I'm active on Twitter, it kind of holds me accountable. That's the best part, is like, I can't even skip a day of keeping up with what's going on in the market. So between engaging with the community and just scanning charts, I'm just kind of on top of like hundreds of coins very passively, but like I said, I'll go through maybe 10 coins in the morning. I'll draw my lines, which takes 30 seconds, and then set an alarm. Like, if it breaks this line or comes into this area, I'll reopen this and then I close it. So I don't have like 1,000 charts open. I just, I wait for the area that I was interested in to sort of hit. And that with time, you just build up like hundreds and hundreds of charts that you have alarms on that you forget about. And then eventually a time comes where it triggers something and you go and take a look at it. So I think that's a big part. I mean, if I'm actively looking for a trade, like a setup to share in the newsletter or something, like here's something that I would be watching, then I'll go like onto CoinMarketCap or Binance. I like to go to like right to the middle, the things that haven't moved. Like, if it's a great alt day, but there's something that's like at 0% or 1%, but still has really nice volume, I like to look, they always say volume precedes price. So if I see like something that's spiking in volume, but price isn't really moving, I'm interested in that chart. And so I'll go look and see what area I'm interested in. It's usually probably like approaching some sort of resistance. So if it breaks that and comes back and retests it as support, that's where my orders will be sitting or something like that. There's a lot of ways. The truth is, like I said, I don't spend that much time trading, but I do spend a lot of time sorting through charts and like looking for ideas,
Yeah, a couple of good tips there. Yeah, so especially setting the alarms and then looking for the tokens which hasn't moved a lot yet. Yeah, but have a lot of volume.
I used to like look for trades on a chart. Like I'd open the Bitcoin chart and just stare at it all day, waiting for some magical trade to appear that I was looking for. But the reality is I could have just drawn a line 7 hours ago and it didn't get there. So why am I watching it? But it's human behavior.
Yeah. We have like this overarching theme in the Crypto Freedom Summit that if you would have to start all over again and knowing what you know now, like you would have like a small budget, what would you do? Like you want to learn trading, you want to enter the crypto markets, like what would be the things that you would do?
I would dollar cost average into Bitcoin and maybe dollar cost average into Ethereum and do nothing else. I mean, if I was new and I was a beginner, now you said if I know what I know now, so that's very different. But if I was a beginner and I was coming into crypto and say I had, $50,000, I want to get into crypto, I would probably take 40,000 of it and say this is for Bitcoin and 10,000 and say this is for Ethereum. Although I actually would probably weight heavier to Ethereum myself, but I'm talking because I just believe it has more upside. And then I would say I'm going to buy this over the next 10 weeks or 20 weeks. And I would set automatic buys on Monday morning at 9 o'clock or whatever it is to buy at whatever price. And I wouldn't even think about it. I would just treat it like an investor who's, dollar cost averaging into any market. That's how people have acquired wealth. But the caveat there is then you have to be willing to hold it for years. If you're going to slowly buy and dollar cost average, it's not so you can sell it if it goes up $10,000, like it's just like an IRA or a 401k or something. The power of compounding wealth is because you don't touch it and you give it time. And that's going to be true in this market like any other, I believe. I mean, I think we'll see 7-digit Bitcoin. I don't see why we won't see $1 million Bitcoin. I don't think that's going to happen soon, but I'll be here in 20 years, hopefully. So that's fine, and I'm not in any rush. And so I think that that's the approach that people should generally take. It's just not a get rich quick scheme. As much as you see people doing it and you follow people on Twitter and there's like McLarens and Rolexes everywhere, but that's not the reality for most people. And honestly, most people who buy, fancy cars and Rolexes, in my experience, end up selling their fancy cars and Rolexes for less than they bought them for in a year or two, we always just joke, but I have a lot of Wall Street friends and stuff. And the joke was that we had a lot of nice friends who had to go live on their brand new nice boat in 2008 because they didn't have a house anymore and nobody would buy their boat. So, so I would just move very slowly and dollar cost average and not even try to outsmart the market. Because if you think it's going to go up over time, who even cares where you buy it? Just buy it and don't be an idiot and sell it too early.
Yeah. What do you think about there's a lot of like these index projects coming up as well in the crypto markets. What do you think about some index buying something like that?
I think it can be a good idea depending on what it is. I mean, I think that if you want to go a step beyond Bitcoin and Ethereum, then you have the natural, the BNBs and which performed exceptionally well in Litecoins and XRPs and whatever. But then you start to get into more esoteric coins and, very few people are going to pick the right one. So the idea of having exposure to DeFi or having exposure to NFTs without buying NFTs or like yield farming, I think is appealing and interesting. So I think that, I would personally think that you should have some exposure to DeFi. If Bitcoin is gold 2.0, then DeFi should be banking 2.0, right? So I want exposure to that. And maybe Ethereum is it's not, but the equivalent would be, if Bitcoin's gold, Ethereum is investing in the internet early, because there's so much being built on it. So I think it's interesting to have exposure to all of these. And like like I said, you just can't pick the right one. So maybe you just buy a basket of the top 5 or 10 and accept that you're not going to find the one that does 100x, but those will do a 2 or 3x, and if one of them fails, you'll at least be exposed to 9 others that didn't.
Yeah, because I noticed for myself that you feel like you want to be exposed to many things because things are moving up and so many great things happening. So I think like also for me, like buying an index, I feel like I'm involved more.
That's how I largely have always invested in stocks. Like mutual funds is for retirement, and buying, it's boring, but buying, SPY, like SPY, it's basically an index fund for the for the Standard and Poor. That's what my retirement is, just blindly buying something that basically tracks the entire market and calling it a day. And I think that that's a great approach in any market.
Yeah. If you talk about the market situation now and going until the end of this year, like how do you see the markets developing now? Like when you see the markets maybe peaking, and do you have some kind of strategy of exiting the markets, and what is your idea?
All markets or crypto markets? Are you asking about like the stock market as well, or specifically
I'm asking
crypto?
about the crypto, especially about the crypto now. Yes.
Yeah. I think the stock market has a bigger problem probably than crypto, although they'll keep printing money, so it'll keep going up. But one day, I dare not try to be the one who times it, but one day that's a house of cards that will likely fall, and it's going to be pretty tragic. Listen, I don't have an exit plan from Bitcoin, but Bitcoin is a percentage of my portfolio. I want more Bitcoin, not less. And I think it's a unique asset that has properties that are more than just an investment to make money or an index fund or any of those things. Like, I want to have Bitcoin because I think it's a great hedge against the bad behavior of central banks and governments. So that makes it more of a, something that you have a belief in, that you want to hold as harder money. So I think take Bitcoin out of the equation, because if Bitcoin went to 10,000, I don't think I would care to sell it, because it doesn't change the importance of it to me as an asset, and much like gold bugs have ridden huge waves, with gold, obviously, because they just want to own gold because even if Bitcoin's $10,000, if the dollar collapses, Bitcoin's going to have value, right? So it's very important, I think, to note that I view the value of Bitcoin very differently than I view the price. You look at the price as a trader, but its inherent value does not matter. The price does not matter if the world turns into that 1% chance that things really blow up and you really want to have Bitcoin. Long diatribe there, but I think that that's important to note that. I don't have stop losses on my Bitcoin investments. Right. Okay. Everything else will cycle and bubble and explode and go up and down. And if Bitcoin rips up or down, they'll all get beaten to a pulp. So it's, I'm very cautious there. I am always taking profit. If I'm in a position that's up 10, 20x, I'm selling until I'm down to like 10 or 20%. And then I move that to the investment side and say, I'm playing with a huge percentage of the house's money. So if this goes to zero, fine, I've already made my money. And but I still want exposure to it if it continues up, So, I mean, while the market's good, I'm always selling. I'm not waiting to find the top. If something goes up 20, 30%, I'm already selling. So I would say that in this market, like I said, I accumulated for so long. And through 2020, I was buying like crazy when things were bottomed out. I got into DeFi stuff early. So I'm selling when they go up. Like other people are looking to get into the market. I'm looking to get out, except for Bitcoin and Ethereum, really. And a few, like I love Elrond, Gold. So I don't sell that. I think it's an amazing project. I love their team. There are a few others that I moved sort of to my investment thing. But, my plan is like, I don't want to have a plan when the tops. And it's also, I think it's important to understand for people, because it's Ari Paul, who I'm actually interviewing right after this for my podcast. He had a great thread where he talked about the sort of negative emotions of a bull run, which you don't consider, but there's always going to be that top and you're not going to sell it. Right. So even if you made made $1 million out of $10,000, but you end up, the market completely crashes and you sell for 500, you made $490,000. You didn't lose the $500,000 that you could have had, right? And I think that that's emotionally a very important perspective to have. You can't always compare yourself to the best case scenario because you'll always be miserable and you'll always be pushing. So I accept that, like, whatever the highest number in theoretical value will not be what I take out of the market one day. And so listen, I've sold things every day. I sell something that like ends up 6 months later being worth like 5 times what I sold it for, but I only sold part and I sold more on the way up. And also, like, who cares? I'm not planning to hold it forever. So, if you can accept that you're not going to be perfect on the bottom and top, you just sell. So listen, I think that maybe if you're new, you use trailing stops. Take some profit when things go up and move your stop loss up into profit so that you just never lose, and you do those things enough where you make sure that you're above your entry, but you're taking profit, and then keep moving it up a little bit. You're going to make money doing that. You might not maximize it. You might not make the perfect amount of money, but you're going to make money.
Yeah, absolutely. A lot of good advice there. And I think you made a good point about comparing, like evaluating Bitcoin, and let's say now it's compared to the dollar. And I guess it can go up infinitely if it's compared to the dollar. But
so that's the argument about stocks, right? I mean, and a lot of much smarter people than me have expanded on this point. But the value of, or the price, I should say, the price of almost every asset is determined by not the value of that asset, but the denominator that you're comparing it against, right? So if you put the dollar under everything, and you pretend the dollar's flat, everything goes up, right? But they're mostly flat when you see the dollar going down. True of metals, was true of Bitcoin for a long time to some degree. I think it's really become untethered. Certainly true of stocks. Like, if you want a good exercise, denominate stocks in Bitcoin and see how well you think stocks are doing, because they're not doing well if you use Bitcoin as the comparison rather than the dollar, right? So or gold even, or silver, you know what I mean? It just depends, but not to the same degree. So yeah, I think that there's a misconception that everything's going up when the dollar is really going down.
Yeah.
And the other thing to note, there's the dollar and its actual value, which, people have made arguments it's dropping 12 to 15%. Michael Saylor certainly says, 15% a year he sees his cash reserves. If you compare it to buying power, it's maybe the dollar didn't drop 15%, the DXY, but you can buy 15% less goods. It's got 15% less value, whatever it is. The DXY is what we use, that, the dollar index, which is compared to a basket of other currencies to sort of determine what the dollar is doing. But you have to also understand that that's relative to other currencies, which are also inflating. So it's, the dollar is dropping relative to these other currencies that are also fiat currencies that are also dropping. So if you untether that, the dollar is doing much worse, sort of, as he says, or anyone who, looks at it closely would sort of say. So even watching the DXY continually drop for a year, it's much worse than that looks, because that's against the euro and against the yen and against these other currencies, the pound, and none of them are great either.
Yeah, that's a great perspective, and it's always good to look for different things from different perspectives. And yeah, absolutely great. So if I understood correctly, you are still buying, or you were buying the dips on Bitcoin and Ethereum?
Yeah, pretty aggressively and pretty publicly, because I want people to see that I'm serious about it, and that. But through the entire, when we topped for a while around 60, I basically was buying, basically there was another top before that, but I was basically buying all the way back down to 42, like just dollar cost averaging, like 42, 46.7, 51. And the most recent buy that I had was weeks ago, and that was at like 57.6 or something, and it dropped to 50 after that, 51 something. But I don't care. Like I said, I care in 20. I tweeted the other day, like, you should care about the price of Bitcoin in 24 years, not in 24 hours. right? So like it's completely irrelevant to me. I'm dollar cost averaging. I'm buying the dip, and I really think, I think this cycle will be in the multiple hundreds. So who cares if I bought it at 56 or 52? I'm not going to remember. It's not going to matter.
Yeah, yeah. I think it's a good idea. Yeah, like the zoom out, like with the charts as well. I guess always zoom out and see what's going on. Really, yeah, absolutely.
Yeah, the more you zoom in, the more mistakes you're going to make. It's bottom line.
Yeah, yeah, sounds good. Yeah, so I think that's it for now. And could you tell people that where people can find you, your YouTube channels and newsletters and?
Sure. Yeah. Honestly, just go to my Twitter. It's kind of everything is there. It's at Scott Melker, SCOTTMELKER. You can also go to the wolfofallstreets.io. Everything is there as well. And so, yeah, there you'll find the YouTube channel, the podcast, and the newsletter, which is kind of my baby. I write it every single day. Like I said, it's really my job. 5 days a week, I get up 5 o'clock in the morning and start writing the newsletter. So, something I'm very, very proud of. But yeah, you can find me on Twitter and everything else from there.
Yeah, sounds great. So yeah, go check out Scott's YouTube channel. A lot of great videos, interviews, charting, humor, all kinds of. So it's it's good stuff. Yeah, for sure. Yeah, and the newsletter and the Twitter. Yeah, everything is good. Yeah. So yeah, thank you, Scott, for this great interview.
Well, thank you so much for inviting me. Very flattering, and I had a great time.
Yeah, thank you. And viewers, I'll see you guys. Thanks for watching, and I'll see you guys in the next interviews. Bye-bye.